Well, first of all, I just want to say that I use Seattle, thank you, I use Seattle as my prime example that I use to demonstrate the power of Say's law, supply creates demand. And by that we mean that one of the driving forces of the economy is entrepreneurship and technology. And so I start off with my students by asking them, does demand create supply or does supply create demand? It's kind of a chicken or the egg type of question. And most of the students initially say, well, demand, you have to have demand. If you can't sell your product, if you don't have the demand for your product, then you're doomed for failure. So while 90% agree with that, which was what I call Keynes's law, I then spent the next hour trying to make the case to my students that Say's law, supply creates demand, is actually what drives the economy. And after talking about it, I used Seattle as my prime example. I said, why is Seattle a prosperous community and growing city in the United States? Why is it a dynamic economy considering that you live in a rainforest? See, that's the question. I can say that because I grew up in Portland, Oregon, and our Portlanders always said envy, because Seattle was always bigger. And I said, Portland's got to grow. But Seattle has always had an advantage over Portland, but still very similar weather patterns. At any rate, I said, what caused Seattle to become a prosperous country, prosperous city? Was it because everybody reached into their pockets and maxed out their credit cards and stimulated the economy that way, kind of the demand side? Did they go heavily into debt in order to achieve success? And I say, no. Everybody knows that Seattle is famous for 4 major companies, billion-dollar companies, that have made a difference in the last 50 years. So the first one, of course, is Boeing. You can't miss it when you drive up I-5. I haven't been here in 20 years, and I see it's still here, even though the headquarters have moved to Chicago. But you can't miss it. So Boeing's been a very dynamic, aggressive, expansionary economy, and it's helped create a boom in this economy. All right, so what's number 2? Microsoft, exactly. So everybody loves Windows. I'm using it right now, even on an Apple computer. I'm using a Windows program. So this is a classic example of Bill Gates. And do you know how many employees, how many Microsoft employees, not investors, employees have become multimillionaires? 12,000. 12,000. Why? Because Bill Gates is a believer in democratic capitalism, not democratic socialism, which is a disaster. Democratic capitalism by giving stock options to their employees, including secretaries. So it's a very important concept that he came up with this. Okay, well, what would be number 3? You all drank it this morning. So I tell students that, and so they immediately get Starbucks. And then the next biggest company, which is the largest market cap company in the world, is Amazon. Right. So I mentioned those 4 examples. I'm sure there are other companies that you can refer to that have headquarters here. But I said, so yes, they produced products that people bought. They were new products. So you could argue, well, demand was necessary in order for this to develop. But the fact is then, in all those cases, consumers didn't know what they wanted until they were given the choice, right? I mean, they'd had coffee all their lives, so why would you need Starbucks? and yet Starbucks filled a need. Boeing flies airplanes, but it took a creative engineer to come up with the 707 and the 727 and the 737 and the MAX. The MAX. Very creative, a little too creative on that side. In fact, complexity is a really serious issue now, isn't it? We just bought an Avalon, Toyota Avalon, and with this screen, there's so much computerization that it's crazy. It's really hard to follow. You're going to get in a car accident just trying to figure out everything that goes on. But anyway, the point I'm making is why Say's law, supply creates demand, makes sense. Is because what is the catalyst? The producer produces first. He didn't do a big survey, consumer survey, to find out what consumers want, because consumers don't know what they want. He came up right up here and came up, let's come up with Starbucks or with Windows or with Amazon and so forth. That's the catalyst. That's the key. So this is a unique experiment with my students because they start off 90% in Keynes' law, demand creates supply, and by the time I'm finished, 90% shift over to Say's law, S-A-Y, Say's law. So anyway, I just wanted to say that because Seattle is really a fun example I use, and all the students really love it. So let's start with Ben Franklin. Ben Franklin said the 3 grand virtues that we all must live on to be successful in life financially is industry, thrift, and prudence. So industry, I doubt that's a problem with anybody in this room. We're all industrious people. We may suffer from excessive work, workaholics. That's often the case. A survey was done to find out which country had people that worked the hardest. And what country do you think that was? It worked the hardest. Germany. Hardest. The longest hours. U.S.? Nope. Japan. This country thinks the Japanese are lazy. The Koreans. The Koreans were ranked number 1. And guess who's ranked number 2? This will shock you. Mexico is correct. Mexicans are the second hardest working people. And I'd love to tell this story to Donald Trump, but anyway. So industry, we don't have too much of a problem with that. Thrift is a problem. I have a graph here that shows Americans saving enough. Probably not. I think we saw a graph earlier that said half the American people have less than $1,000 in cash available at any time. It is a problem. The Japanese have $70,000 on average in their bank accounts. So they don't have a thrift problem. Asians save a lot, Europeans save a lot, but Americans don't. So that is a problem. And then I'm going to go back because there is the other one, prudence. Prudence is the most difficult for investors. That's been my experience as an investment advisor since the 1970s. I have met many individuals who have sold their business, sitting on a pile of money, and they make the mistake of putting it all or a large share of it in a highly speculative venture that's promising 20% returns. You know, Bernie Madoff made 12% return every year no matter what was going on in the marketplace. And people eventually lost everything. And I've met people who have lost everything. I'll never forget getting a call at 7 o'clock in the morning at a Howard Ruff conference back in the 80s. I don't know how many remember Howard Ruff. But I was in LA and got this call from a man who had sold his business, several $1 million, and put it all in a foreign mutual fund that promised 20% annualized return. And the result was he had tried to get his money back. They sent him a check. The check bounced. So it's pretty clear that he was defrauded. And sadly, he put his entire investment in this. And then he teared up because he said, not only that, but I put my wife's money in it too. So that's definitely a no-no. Prudence. Prudence is so difficult because when you walk in that hallway and you meet with people, everybody has a great story, right? Nobody's going to tell you, don't invest with me. But 90% of all investments, new investments, pre-IPOs fail. I know because I've invested in at least 20 of them. And 3 of them have made me multimillionaires, but the rest of it I've lost. So it's very high risk, and you have to be prudent. You don't want to put too much money in any one investment, no matter how promising the returns seem to be. Very important concept. Is investing a loser's game? So this is one of the most powerful charts you will ever see. What you have here is the 20-year returns. This was done by Richard Bernstein. 20% returns in various categories. Healthcare was number 1, annualized 13% return. Energy, very high. Real estate investment trust. You can see the S&P 500 up about 10% per year during this time period. But then look at the red marks. The red represents what the average investor did. And they underperformed a money market fund. Underperformed. Why? For 2 reasons. 2 reasons. Cherry picking, buying your favorite stock and hoping to beating the market. Yes, you can do this. I mean, my newsletter does make individual stock recommendations, and I do try to beat the market, and I've been successful. I consider myself a survivor. I have been able to do this, but a lot of people have picked the wrong stock and put too much money in that stock. And the other thing they do is trading, buying and selling to avoid a bear market. I have a debate with Mike Turner at many of the money shows. Maybe you've seen this debate that I've had. Buy and hold, which is my approach. Buying a stock that has a good long-term perspective, buying it hopefully at a decent price, and hold on through thick and thin, long-term perspective. And his argument is, well, you know, but can you afford to lose 50% of your money during these bear markets that we have every 10 years or so? And so I lose that debate every time, by the way. Mike Turner wins that debate every year because I can't live up to, I mean, how do you win a debate against someone who promises to keep you from losing that 50%? And yet also be able to make money on the upside. Well, I think it's easier said than done. And I know that Mike Turner himself has had to change his program a number of times in order to be successful. Now he has a new formula that seems to be working. Now, hopefully it will. More power to him if he can do that. But timing, market, I argue, and I have a quote in here from Jesse Livermore, one of the great speculative kings of the 20th century, who said, investors don't need timing, they need time. Time to make money, because some of your investments don't make money right off the bat. Mine do, of course. But all right, so trading, those are 2 dangers. So I wrote a book some time ago called Investing in One Lesson. And the lesson is Wall Street exaggerates everything. The business of investing is not the same as investing in a business. And you can see that with this chart. This is a wonderful chart. Probably never seen this one before either. Wall Street versus Main Street. So the red line is the stock market. The red line is the economy as measured by nominal GDP. And you can see it's kind of an upward trend. And the stock market in the U.S. is also in an upward trend. But there's a big difference. Wall Street exaggerates everything, right? So the stock market gets ahead of itself from time to time. Ahead of itself several times here in this chart. It's on a roller coaster ride. So when the economy catches a cold, the stock market goes into pneumonia, right? And at the same time, when the economy is doing well, Wall Street exaggerates on the upside. So the question you have to ask yourself, well, first of all, let me ask you this question. Does dollar cost averaging work with this chart? Does buy and hold work with this chart? Yes, it does. If you hold on through thick and thin, you make money. So, but the other question is, how many of you have the guts in 2000, early 2000, and then in 2008 to 2009, how many of you had the guts to hold on while the market fell 50% and your portfolio fell 50%? Now, maybe some of you have been able to do that, but it's very difficult. I've gone through this. Lots of investors have gone through this, and it's very difficult. So what is my favorite way to beat the market? And my strategy is dividend strategy. Now, granted, a lot of people talk about that today. This is a popular area, and I am worried that dividend-paying stocks is becoming so popular that it loses its appeal. So what I've tried to do is focus and be a little more specialized in what kind of dividend stocks do well. Now, dividends don't lie. There's no such thing as a perfect truism on Wall Street. You have to be careful about this. Most of the time they may be true, like sell in May and go away and don't come back till Labor Day. Well, it works most of the time, but recently it has not been a good strategy to sell during the summer. You've had summer rallies. So dividends don't lie very much. They certainly don't lie as much as earnings do lie. The problem with dividends don't lie, the problem with this title is that companies can cut their dividends. They can eliminate their dividend. So you need to make sure you choose a company that's profitable. So that is my strategy. I'm going to, this is a little publicity here to indicate that I have made some good calls because this was in 2017 when I was on with Rick Santelli calling for the mother of all bull markets at a time when advertisers were promoting every month that we were headed for the mother of all bear markets. So I have been on the right side of the market during this period of strong bull markets. But this is a very interesting chart as well on dividends. Dividend versus non-dividend paying stocks. So the yellow line are non-dividend paying stocks. And they are clearly the most volatile. You see the dot-com period there in the late 1990s. And they end up about halfway in the middle of the total return. If you dollar cost average, you make money on non-dividend paying stocks. But who would like to have that kind of volatility of losing as much as 70% of your portfolio? It's not, and you have no cushion because they don't pay dividends. What's the red line? Anybody want to guess what the red line is? Those are dividend cutters. So these are companies that have had to cut or eliminate their dividend. So they're the worst performing. And then what is the blue line? Okay, those are the dividend growers. So I'm focused on dividend growers. So you learn two things from this. One, do dividend-paying stocks avoid the bear markets? No, they go up and down, just everything else. The difference is they cushion the fall. And especially if you have a rising dividend policy, it's very comforting to receive in the mail an increase in the dividend during a bear market. It says that the company is doing well enough that they can continue to increase their dividend. So I love that, and the stocks I recommend do that. The other thing you learn is that rising dividend stocks outperform the market. They do the best. So that gets me to what I call sleep well stocks. Nothing is a total sleep well, but this comes the closest. So number one, I want companies that are consistently profitable in a growing industry. That's number one. So I don't just blindly choose any dividend-paying stock. It has to be a profitable company in a growing industry. And you'd be surprised how many investment companies pay a dividend when they're losing money. They can't keep it up, but they often do the case. And number two, I want stocks that enjoy above average dividend yield. That's very important. And then number three, I want stocks that have a rising dividend policy. So when you put all three of these things together, you have a very powerful formula for what I call investing with peace of mind. So we're choosing high quality, high yield, and growth of yield. Now, notice I'm eliminating a lot of stocks that are very popular that have made a lot of money. So I did not recommend Apple at all until they started paying a dividend. I still haven't recommended Amazon. So I miss out on companies that have gone through the roof. But there is a bias in the marketplace that tells you these popular positive stories like Amazon, but they ignore the companies that went bankrupt that never did make it. There's a survival portion of here, a bias towards survival companies that have done really well. And I avoid those. I avoid even the ones that are very successful because I'm looking for companies, once they start paying a dividend and it's a rising dividend and it's a high yield and so forth, then I show some interest. And look, don't get greedy. Don't get greedy. These companies that I'm about to show you have been super successful year after year with their dividend policy and also their profitability. Their stock has moved up and down. The long-term trend is up. So here's the first one, Main Street Capital, which is a business development company. It is the best of the breed. I don't recommend any other business development company. This is the only one I recommend, Main Street Capital. Now that chart is really good. Does not include its dividend, which is 6 to 7%. So add on a dividend and a rising dividend policy. They just raised their dividend to 20.5 cents the other day. They also pay a special dividend twice a year. So you get an extra dividend in July and December. And let me tell you, folks, out of the 6,000 stocks that trade on the New York Stock Exchange and the NASDAQ, so forth, this is the only one that pays a monthly dividend plus 2 special dividends a month. So just by show of hands, how many have heard of Main Street Capital? You're all subscribers to my newsletter, right? You owe me, because nobody else talks about this stock. Main Street Capital. By the way, I do have a special here at the show. It was to include a free copy of the Maxims of Wall Street, but the free copies have disappeared. However, I will mail you an autographed copy of the Maxims of Wall Street if you do sign up. So I have a form that you need to fill out if you're interested. So my newsletter is normally $250 a year, but you can get it for $99.95 here at the show. And you get a monthly newsletter, you get an email every Monday or a voicemail every Monday updating you about my newsletter. And here are some extra copies of my newsletter if anybody wants to see them. They're right here. I know some of you came in a little bit late and may want a copy. So, by the way, I do want to emphasize the color of this newsletter. What color is this? It's gold. It's gold, folks. It's not yellow. I know you think it's yellow, but it's gold. I'm not a chicken. You know where I stand on the investments. It's not yellow. I keep telling my publisher this. All right. So anyway, I'll hand these out here for those of you who are interested in getting my newsletter as I continue to demonstrate to you this strategy that I've developed. I've been writing my newsletter since the greatest president of the 20th century was elected. So how long have I been writing my newsletter? Some of you said FDR. No, 39 years, folks. 1980, Ronald Reagan was elected, and I started writing my newsletter. And I am a survivor. There's a lot of people who were writing back then. They're not around anymore. In fact, let me tell you this. I was at the very first Money Show in 1978 in San Francisco. And I am the only speaker from that list still speaking at the Money Show. Now that's worse. That's right. I am a survivor. Thank you. Thank you very much. Thank you. And I'd like to think it's not just that I've outlived these other guys, but I'm offering something that I think has been valuable, and I do try to stay in good shape. So how about that? Okay, Main Street Capital. So I say the gain in Maine is simply insane. That's my phrase. Main Street has, as you can see from this chart, look at the green, Main Street has outperformed Warren Buffett and outperformed the S&P 500, which is not easy. Not easy to do, but by substantial margins. And they still, the formula that Vince Foster, that's the founder and CEO, Vince Foster's used in his whole group of people, really fantastic people. In fact, I'm very pleased to announce that Vince Foster, and by the way, this is not the resurrected Vince Foster, the guy who was killed during the Clinton administration, just in case you were wondering. Vince Foster is alive and well, founder and chairman of Maine, and he will be speaking at our Freedom Fest conference in Las Vegas. I passed out some cards for you. I hope you will consider attending, because he has never spoken to any investment group before, but he is coming as a favor to me to speak, and we're going to honor him. We're going to shake his hand, get a picture taken with him. This man has made my investors extremely wealthy. So it's a real honor and a privilege. There I am meeting with him in Houston at the time, and he's coming to Freedom Fest in Vegas, so I hope you can join us there. All right, talk about burgeoning business, senior housing, assisted living, nursing homes. Care Trust is one that I'm recommending. You can see it has done extremely well over a long period of time. CTRE is a symbol, based in California. This company is really doing well, has a rising dividend policy, very profitable. This is definitely the future, right? Aging population, technology is improving medicine so that people are living longer, but they need assisted living because they're living longer. So just by a show of hands, how many have been to a nursing home recently? Now, don't you agree it's fantastic? Can't you just wait to get into a nursing home yourself? I mean, it's just so much, they have so many activities and stuff. And what's really cool is that if you're a subscriber to my newsletter and you are put into, and you enter into one of these nursing homes, you'll go around and high five everybody saying, I'm profiting from you. It's just great. It's a great feeling. You'll love getting older if you subscribe to my newsletter. Okay. That's Care Trust. That's a great one. Another one's enterprise products. Now, I do show this because I want you to show that not everything is perfect, sleep well at night, everything works fine. There are problems with companies that fit my three criteria. Enterprise products, which is a midstream pipeline company, oil and gas, fee-based, export, liquid natural gas. It has all kinds of things going for it. It's very profitable. And yet, it is subject to bear markets. You can see what happened in 2013 to 2015 when you had a major treacherous bear market in oil. And the stock fell 40%. But during the entire period, they kept raising their dividend. And I said, why would a company keep raising its dividend? And the reason is because it's still profitable. It was still making money. And it was building for the future. It has right now $5 billion in projects, expansion projects that they're working on. So sure enough, look at the recovery since it bottomed out in, 2016 there. So that was difficult. I got letters from subscribers complaining and so forth, but we held on and it's paid off, especially a dollar cost averaging program. By the way, on Main Street Capital, I have never, ever received a letter of complaint from investors in Main Street Capital. And you can see that with that chart there. You can see why I haven't had any complaints. But Enterprise Products has tested our metal with that 40% decline, but it's since done really well in major recovery, as I expected it to do, because it had a rising dividend policy. It met all three of our criteria. So Microsoft, I think, was mentioned earlier this morning as a boring stock, and of course the stock has just been tremendous. Now, I'm not showing you Microsoft for the 15 years prior to this, where it went nowhere fast, but it does. This is an important chart to demonstrate the importance of the proper CEO. So when Bill Gates left, you had Steve Ballmer come in, who simply was not suited. He was a rah kind of guy, and he's great for the Clippers and that sort of thing, but he is really not someone that you want running a company. You all agree with that? Yeah, for sure. But Nadella coming in, wow, he has made a difference. I mean, Microsoft is working on all 4 cylinders, or all 8 cylinders, and everything, and it's with its cloud computing, data gathering, gaming, and artificial intelligence, and all that sort of thing. So I feel very comfortable recommending Microsoft. And in fact, Swiss bankers, I know this in talking to Swiss bankers. It used to be that Swiss bankers, when an American would come in to open up a secret Swiss bank account, any of you have any of those? Just curious. Secret Swiss bank account, anybody want to raise their hand? I didn't think so. But suppose you did. Well, one of the parts of a secret Swiss bank account is you have a safety deposit box, and you put in stock and bearer instruments and that sort of thing. And so Swiss bankers would be asked sometime, well, what stock should I put in for the long term so that when my heirs open up the secret Swiss bank account, they have a big smile on their face? And for years, that stock was IBM. IBM was that stock for many years. But now it's this one, Microsoft. That's the stock you want, that you're not beyond meat. That's just a little too risky. Microsoft, it's a great story. And by the way, nice raising its dividend as well. Now, the other thing that I do in my newsletters, I've been doing this since 1994, it's the Flying 5 strategy. Have you all heard of the Dogs of the Dow strategy? Dogs of the Dow is choosing, of the 30 Dow stocks, the 10 with the highest dividend. But my formula, and I tweak it a little bit, what I look for are the 5 highest yielding, lowest priced stocks of the Dogs of the Dow. So as a result, and I'll show you what I have in the current Flying 5, but look at the return on that since the financial crisis of 2009. Now, I tweak it from time to time. For example, you'll see that I outperformed the market last year considerably, but I did make one change. If any Flying 5 stock cuts its dividend, I remove it immediately. And I haven't had to do that very often, but I did do it in last year, I guess it was the year before, in 2017, when GE, which was in the Flying 5, losing money, and they announced they were cutting their dividend. When they did that, we got out right away. So it's not a total mechanical system. I do analyze these stocks. And so we really escaped a disaster with GE, and we replaced it with Verizon, and Verizon has really done well. So these are our 5 stocks right now, the Flying 5, and I cover them every newsletter, monthly newsletter. Cisco Systems has been on fire. It's up 30% in the last year. Pfizer is struggling a little bit this year, but last year was up 18%. Verizon has done really well this year and last year. Coca Cola is also finally coming back alive, and Merck is doing a lot better than Pfizer. So you can see how well we've done, and these figures for 2018-19, a little bit out of date. They've actually done a lot better than the 10% figure that I show right there. So I do this, I change this every August issue, and it's really been successful formula. Let's see here, what am I doing? Oh yeah, these are the stocks. This shows you how well Cisco has done. Pfizer, Verizon, Coca Cola, they all have an upward trend. This is a technical system that helps you find bargains in the Dow stocks. Merck has really taken off. That's done fantastically well. Now, I do want to talk about one mutual fund, the Barron Growth Fund. You can see it fell pretty sharply there, but made a major recovery. Barron Fund is up 30% this year. 30% this year. And has beaten the market pretty consistently over the 20 years it's been around. It's run by Ron Barron. Ron Barron is on the Forbes 400 richest list. He's done a wonderful job with the Barron investment group of mutual funds. How many have heard of Barron investment funds? Okay, they're based in New York. And what's really cool about Ron Barron is that he invests, I quoted in the Maxims, he invests in people, not companies. That's his slogan. We invest in people, not companies. So he really focuses on the CEOs. Now, he's not perfect. He thinks that Elon Musk is the greatest thing since sliced bread. I have my doubts about Elon Musk, but Ron, he brought him to his investment conference and so forth, but nobody is perfect. And the fund that I recommend, the Barron Growth Fund, does not have Tesla in it, and that's one reason it has performed as well as it has. Barron does an annual conference. If you are a shareholder, you will love the benefit that is provided. He does an annual conference at the Lincoln Center in New York City and brings in top CEOs who give a story about their companies. And then at lunchtime, he has surprise entertainment of people in Broadway, music, jazz performers, rock and roll performers, comedians, and so forth. And it's surprise, you choose a topic, and then you go and you meet whoever he has. And then at 4 o'clock, after he speaks and his analysts speak, he has a very big surprise entertainment, and that can be Paul McCartney. I've seen Paul McCartney, Barbra Streisand, lots of rock and roll bands and so on. He's had every band imaginable except Bruce Springsteen. The boss has not shown up yet, and everybody thinks this next year it's going to be him. But it's free. It's absolutely free for anybody who has $15,000 or more invested in his fund. Now, you get front row seats if you invest $250,000 or more with him. Of course, that's what we have. My wife and I loves it, and we go to this every year, and we meet Ron Barron afterwards. He comes and says hello to everybody. I mean, I love this. That's what investing is all about, is a little bit of personal touch, right? And and you make money at the same time. So it's really a wonderful strategy. So that's the kind of thing that I like to do with my investments, very personal touch. This is a quote from or Steve Forbes that we saw today, this is what he said at Freedom Fest. Everyone is a disciplined, long-term investor until the market goes down, right? So there's a lot of people who love my book. This is quoted in the Maxims because you can learn a lot from just these one-liners. Dennis Gartman, the commodity trader on CNBC, loves my book, refers to it daily, and recommends it to everybody. So if you didn't get a copy, I encourage you to get a copy, and you can if you subscribe to the newsletter. And does anybody would anyone like to get a copy of this and consider subscribing to the newsletter? Why don't I pass these out right now, and then I'll finish up with my conclusions and stuff. Here you go. Anybody else? Yeah. You one together? Yeah. Okay, you're already getting that. Now you can renew, by the way, also with this at $99.95, which is a pretty good deal in that respect as well. Others of you would like, if you could pass these around, that would be great.
Can I help you?
Yeah, why don't you do that? That would be great. That would be tremendous. Thank you. By the way, do any of you have questions on any of my stock recommendations or my strategy? Yes. Oh, and in fact, this is being recorded, so stand there at the mic to ask questions, please.
Graph of dividend increasers. Was GE in there until they cut the dividend, then all of a sudden went to the dividend cutters?
I don't know the answer to that. I know they did have a rising dividend policy. I know that. And there was real worries that they would have to cut their dividend, and that's why the stock was falling. But we didn't get out of it until they actually officially announced they were cutting their dividend. And by the way, the stock continued to drop another 30%. Meanwhile, we got into Verizon and it went up 10%. So we really saved our subscribers a lot by doing that. Yes?
Hopefully you can clarify something for me. I remember hearing Freedom Fest mentioned during the Maria Butina Russian money last election cycle. Can you clarify that or just mention that?
Yes. So Donald Trump came to Freedom Fest in 2015. It was very controversial because this was right after he had made disparaging remarks about the Mexicans being rapists and murderers and all this sort of thing. And so when Donald Trump agreed to speak at Freedom Fest, he wanted to speak to our group, and we have 2,000 people there who are very wealthy people and influential. So he came and spoke, and half the audience gave him a standing ovation, and half the audience sat on their tail. You know, they just didn't get up at all. So he was a divisive character, but everybody was there. It was standing room only. In fact, Donald Trump came to me and he says, "You go out and tell the audience. You go out and tell the audience." He always repeats himself, that this is the largest crowd you have ever had. And I said, "Yes, sir, I will." And I was willing to do it because it was true. In fact, our exhibit hall, normally we have people in the exhibit hall all the time. There wasn't a single soul in the exhibit hall. They were all here to hear this guy. And so I said, "Trump, you can speak, but you have to take Q&A from our audience because they don't like a lot of things he said." I mean, that's basically what I was telling him. And in fact, Roberto Salinas from Mexico is one of our top speakers and moderators at Freedom Fest, and he came up to me and he's shaking his finger with great anger. He says, "How dare you have this man come to Freedom Fest who has insulted my people in Mexico and does not represent in any way the Statue of Liberty with his arguments on immigration." And I said, "Listen, Roberto, I'll tell you what I'll do. Why don't you ask a question? I'll have you ask the very first question, and you can confront Trump on this very issue." And he says, "You're on." So sure enough, that's exactly what he did. And I gave him the chance to stand up, and he went at it with Trump. And Trump said, "Is the Mexican government, they've paid you to be here, correct?" You know, it really went back and forth. And Roberto quoted from the Statue of Liberty, "Give me your poor, your Anyway, a month later, Roberto calls me on the, or emails me and says, I just want to thank you for having Donald Trump at Freedom Fest, because my debate with him, my 5-minute debate, has gone viral, and 5 million people have now watched it. So I want to thank you. So the other person that asked a question there was this gal Maria, who turns out to be a Russian agent, and she asked questions to Donald Trump. And so we have, for the last 3 years, we've gotten requests from all the media about this woman who was, I didn't even know who she was. She just showed up, and she asked Trump a question about Russia. So the whole Mueller investigation and everything was very much involved in this. So Freedom Fest got a lot of publicity about it, but we knew nothing about it. It wasn't something we set up. And she apparently was not registered as an agent, so that's why she's in jail now. They put her in jail for something, but it's not. I mean, it's totally innocent from our perspective, and really, if you listen to it, Trump was making his excuses for his, he does have relationships with Russians. I mean, he builds hotels and so forth. That's part of it. So it's all part of that controversy, but it really didn't. It was just good publicity as far as we were concerned, because Freedom Fest has had some major influence in the media. And in fact, Trump's polling was going down, and the day he spoke, which was 7/11, 2015 in Las Vegas, was his lucky day, because the polling started turning around during that time period. So we're taking full credit or blame, depending on your perspective, on Donald Trump's election. Question?
Investing question.
Yeah, please.
It's hard to beat all that. So anyway, what do you think about international stocks, international mutual funds? Is there anything, what's your perspective on that?
So I looked at studies. For example, in the year 2000, there was this book that came out. It was an academic study that studied 34 stock markets for the last 100 years during the 20th century. Now, this is limited to the to countries that had a stock market for 100 years, but it did include Japan. It included Asia, many European countries. It included the United States and Canada. And it's called The Triumph of the Optimist, and it found that all 34 stock market indexes were bullish, that is long-term, had an upward trend, including Japan, which kind of surprised me. But what was interesting was the American exceptionalism. I usually show a chart, but I don't have the chart here with me. But if you look at that book, the U.S. stock market outperformed substantially all of the other 33 country index funds, every one of them. So I've always had a bias toward U.S. markets. In fact, that trend has continued since the year 2000. So emerging markets have been very up and down. You have to trade them. They're not good long-term investments. And forecasts and strategies, if you look at my newsletter, is more long-term oriented. So I've dabbled occasionally in emerging markets, but it's always been disappointing. International stocks have always been disappointing, as have gold stocks. I am recommending gold stocks for the very first time, but it's a very conservative play. It's Franco-Nevada, FNB, that's in there, and we're up 12, 13% this year, but nothing to write home about. My portfolio on average is up 15% this year, so we're slightly ahead of the market, and we're recommending Main Street and other stocks and Barron and stuff that have really done well. So we pretty much, if you look in the newsletter, there's no international position in our investment. You have a question?
Yeah, regarding Microsoft, does their $1 trillion valuation concern you? Looks like a couple of companies have stumbled at that valuation.
Yeah, so they're Amazon. They're all vying for what is the highest market cap stock in the country, and Amazon, I think, is still number one. But Microsoft is hovering around. In fact, I think it is now back to 1 trillion. Look, if you have a bear market, that's not going to be sustained. It's going to continue. It's going to drop like any other stock. But everything they're doing, their competition with Amazon on cloud data with Azure is extremely positive. Their alliances with LinkedIn and so forth are working out to be very positive. So I think as long as the stock market holds up as it is doing, then I'm all in favor of Microsoft continuing to do really well. But again, there's an old saying, the easy money's been made, that's for sure, with Microsoft that we were recommending when it was $40, $50 a share, and now it's at $132. So that's a pretty big move. Yes, ma'am.
You talked about some IPOs that you bought, and some were stinkers and some were
Yeah.
really great. Could
Yeah.
you give us at least the really good ones that you did?
Well, the latest one, I did invest in a pot stock, marijuana stock. You know, you always have to choose some kind of a new technology or new market for this to really make money in these pre-IPO private placements. So this is called Pharmacielo. It trades on the pink sheets. The symbol is PHCEF. I had 150,000 shares that I got at seed money for half a cent per share. This is the lowest price you can get for seed money. So I paid $750, and my profits are approaching $1 million. So, you know, that's like winning the lottery, but it's not normally available to general investors. I got involved because I knew the CEO and the founder, and he had previously gotten me into an investment about growing hair back. So I lost $100,000, but he felt bad for me, so he got me involved in this stock. I wished I'd put in more, of course. That's the frustrating thing about markets, but still, I'm not complaining. Overall, it's been a success, but very volatile. You know, I paid off my mortgage with one of these deals. It's a lot of it's luck, because I would say I've had 3 good deals out of 20. So that means 17 of them were bombs. I lost everything. Yeah. Yes. Oh, yes, sir.
If you assume, like this morning's speakers did, that we're headed into a bear market, what kind of percentage of a person's portfolio do you think would be appropriate to keep in cash to purchase stocks that come up on sale?
Well, we do use stop orders, and that develops a cash position for us. We don't just sell just to sell. We want to hit a stop. And so I do have some stops in place in the marketplace in my newsletter. And that gives us a cash position to look for bargains during a bear market. And we certainly entered a bear market in December of last year. Market fell pretty sharply and offered some real opportunities for us. But long term, I generally, because they're dividend-paying stocks, they cushion the fall and they do really well when they recover. So we stick with it in most cases. Enterprise Products is an example where I did not use a stop order because they kept raising their dividend and everything looked good. It was just a lousy market for oil for a couple of years. So we stayed with that. So it all depends on the individual situation in that respect. Yes, another question. How are we doing on time, by the way? Or is our time up? Oh, okay, our time is up, so quick.
You said that there was 5 stocks. You've only gone over 4. Did I miss
Well, and I added the Barron Growth Fund, right? I think that was a mutual fund instead of a stock. Let's see. Well, and I've got the 5. There's more than 5, if you count the flying 5 in that respect. We run out of time. For those of you who want to sign up for my newsletter, and you will get an autographed copy of The Maxims of Wall Street, if you can meet me outside here, because we need to close up here. and fill this out and give this to me, and we'll be all set. Thank you all very much.